So we here at OPIS think that 2019 is going to be more or less a transitional year. Earlier this decade, we thought crude oil prices were going to be in a 40-60 neighborhood for much of the rest of the decade. We've kind of recalibrated those ranges a little bit. For the year, though, we're expecting prices to range somewhere between $25 a barrel, about $40 to $65 for WTI, and then about $50 to $75 for Brent. We expect the crude oil price peaks to happen sometime either in the second quarter and then also possibly again in the fourth quarter. Look for those prices to start to make their move higher in the late first, early second, March and April. That may be some of the more volatile months of the year because of macroeconomic fears fueled by the U.S.-China trade war, or at least a ceasefire on tariffs. Iran's sanction export waivers expire, and there's also a pivotal OPEC Plus meeting happening in April. So with that said, that's the template for the second quarter. Meanwhile, the fourth quarter could see prices move higher in preparation of the IMO 2020 specs. Now, moving on to retail gasoline, we're expecting prices to average somewhere around the $2.55 per gallon level in 2019. That's obviously much less than it was in 2018 when it averaged about $2.72. Low prices in the first 2 months of the year could be revisited in the last 8 weeks of the year. Geography in retail gasoline prices, it should play a pretty big role. The Pacific states and Western Rockies are most susceptible to much higher prices. California and the Pacific Northwest in particular could climb towards $4 a gallon on a sustained refinery issue, should that emerge. Even with a rollback of CAFE standards, more fuel-efficient vehicles being on the road and the fleet getting more efficient should keep demand from changing too much. Demographics could also play a key role in that new drivers are expected to not increase by that much. Premium gasoline, probably still about 50 to 60 cents above regular gasoline, and that's not necessarily due to any sort of increase in demand. It's more about opportunistic pricing.